Good morning, everyone. Please, can you hear me?
Good morning. Good morning. We can hear you.
Okay, thank you. Actually, my question is based on the fact that I want to transit from a day trader to intraday trade. So I'm still finding it difficult because normally I usually trade the power of theory, which is basically structure alone. So now the fact that I want to transfer into day trade, intraday trade, I'm finding it difficult to align. Like now, I say I want to be taking 2 trade per day, but the setup is not even coming. So from my research so far, I found out like the trading section is what define the intraday. So I don't know if you can talk about that and you giving me any kind of guide on okay, this is what I think you should do first if you want to become a intraday trader. So that's just my question.
Okay, so you are familiar with swing trading, right?
I'm
And
familiar with what?
you're familiar with swing trading and you want to transfer to intraday trading, right?
Yes, exactly.
Okay. So I don't really separate myself from any of them because I can't tell when the market is going to be nice. Whenever I come in and I see a clean chart, I go into the market, and if I'm free enough to watch my chart, then I trade. But if you're finding it difficult to transcend from a swing trader to an intraday trader, it's probably because you're used to having your bias from the higher time frame, one. And then secondly, you are probably not used to having quick moves like an intraday trader says you can have a zone close to your 5 minute time frame and then you get mitigated very early. It's not as uh, long as waiting for a swing direction. So what I would say is you should study sections, one, based on your time frame. Okay. But one thing you should know is that if you're looking to trade a very quick market, let's say you're looking to get into the market, look for something, and then get out in the next 2 to 3 hours, you should focus on understanding the movements within New York section. Okay. Find a way to balance yourself into understanding New York section and then also understanding London section. So London section is the section you see most of the manipulations that multiple highs and lows get cleared out. You don't really see a stable trend at London because the market is just opening from Asian section. So the Asian section is more of the accumulation section. There's always slow price action and then they're building up liquidity. So London comes in to clear out those liquidity while New York give the clean move. So if you want to be an intraday trader, you would find it difficult to get a direct entry from London section because you might find it difficult to have a swing point, which will take you maybe 50 to 30 pips without getting cleared out. So London section is for quick scalping. If you're looking to scalp, you are likely to get something in and out from London section. But if you're looking to hold for the day, maybe till the next day, or to hold till the section is over, it's better you understand New York section. But if you want to be an intraday trader, sections is one of the things you should pay attention to. One. Secondly, try and understand the structures within 30-minute time frame after you have identified your higher time frame structure. So how you do your swing trading where you have your higher time frame POIs and all those stuff, when you come to the lower time frame, go and do the same thing on the 30 minutes. Why I'm choosing the 30 minutes is because the 30 minutes is within the 1 hour time frame, and the 1 hour time frame is probably the time frame you would watch on your MT4. You know the MT4, you have the 1 hour, 4 hour, then daily. So the 1 hour is the one that is directly below the 4 hour time frame. So the 1 hour can give you the direction, while the 30 minutes gives you the trend. Just like how you do your swing trading, where the weekly gives you the direction and the daily give you the structure. So the 30 minutes will be your structure and your 1 hour will be your trend. So when you pay attention to the 1 hour time frame, you then see the opening and the closing of the day. You can then use the 30 minutes movement to understand your entry points from the lower time frames of the 15 minutes and the 5 minutes. So if you understand structure and you understand how to move within the time frames like this I've explained to you, then you can gradually see yourself, transcending into an intraday trader than a swing trader. Okay.
That's fantastic. Thank you.
Yeah.
If I get you clearly, Ba, you said Asian time is mostly manipulation. Then London section will come in, still making
No,
either.
Asian section is accumulation because the Asian section is one of the slowest section. Now, you remember, if you look into history, the most recent continent that is doing very well in economy is the Asian section, while one of the oldest is the London. So the London section is where most of the manipulations happen. And then the New York section is where you see a clean trade because you have more liquidity within the New York section. So the Asian section is where the market is slowing down because in New York, everybody's already done with the market for the day. Also the same for London. And then the time frame is within Asian, which they are not really familiar with retail trading, and institutions like the Wall Street and all of that are not active. So the Asian section is mostly slow, which is for Nigerian is midnight. So nobody is trading during that period. The market is slow, and if you are looking at trading the next day, when you come into the market, the ASR section is already done. That is for Nigerians. London section is in the morning. So when you're coming in the morning, the Asian section is already done. Now you can use the high and the low of that Asian section that was created in the midnight to understand that that high is liquidity. The low is also liquidity. So if London is coming in with manipulation, it's probably going to be clearing out those areas, or is heading to clear out those areas first before the major trend for the day will continue. So there's this ICT template for London trading. I don't know if anybody has it. If anybody has it within the chat, you can drop it in the group so he can look at it. It shows where multiple highs and lows are cleared out. There is no major structure until London is done. That is actually very true. So if you're familiar with London section, you would know how those manipulations work, and you won't trust any high at all. Right? You will focus on clearing out the internal structures of those 1 hour time frame and then scalping the market. Why, if you want to hold the trade to the next day, you should likely get your entry from New York, or you might get stopped out before the market moves in your direction. So do you understand that?
Yes, I do. I do understand that. But I know, sorry. Now the fact that let's say New York section start around, is it no afternoon?
Yes, New York session start around, for Nigerians, around 3 to 4. Around 3 to 4,
Okay.
the market is settling in. The intersection between New York and London section, there's always an intersection. That is the
Yes.
key zone. See, key zone is different from sections. Key zones is the transaction from one section to the other. So the key zone for London section is around the intersection from Asian to London section. So the handover is the key zone, because that handover, you can easily get a clean point, which could likely to form the low or the high of London section, and that might hold till the whole trade is over if it doesn't get manipulated. So the intersection between two sections is the key zones. For me, the key zones for London is around 8 to 9. So for Nigerian time, I just come into the market around 8 to 9. I'm likely to get an entry, or an entry has been mitigated that you can join in and get a clean trade. While the intersection from London to New York is around 12 to 1. Okay, so 12-1 is the period between London to New York intersection. So you can get an entry from then. And then there's an intersection from Tokyo. There's a section they call Tokyo section before the main Asian section. That happens around evening of the Nigerian time. So around 6, around 5, 4, that evening period is when there's the New York closing kill zone. That is the intersection between New York and Tokyo section. So each section has two kill zones: the opening of the section and the closing of the section. So it's a circle. As London closes to New York, there's a key zone where you can get into ride New York till New York closing to Tokyo. There's another key zone where you can get an entry till Tokyo to Asian section, and then the Asian to New York section for the next day.
Wow. Wow. Thank you
So
very
if
much, sir.
yes, if you look into that, you will get those understanding, and then you will know how to fix them. Let's get to
Thank
someone
you.
else so we can have the flow. So any other person, if you have any question you want to ask, just raise up your hand and I will. So Tony, I'm about to free your microphone now so you can ask your own question. So you can unmute yourself now.
Okay, yeah, good afternoon, everyone.
Good afternoon.
Please, my question. I'm not really into forex. I'm more of like crypto. So I wanted to ask these fundamental news that normally occur. How how much effect does it have on the crypto markets, especially BTC? Because I noticed that the fundamental has a lot of effect. So I was hoping if you could explain more on that.
Yes, okay. So the fundamentals on the aspect of um, forex that affects the um crypto market is DXY1. All right. So mainly, almost all high impact news on forex like CPI, NFP, the FOMC speech, news like that are likely to affect BTC because BTC is paired with USDT, and USDT is the official crypto token of USD. So if there's a high impact news on USD that is likely to move DXY, there's every tendency that is going to make an impact on BTC. So if there's a news coming out for NFP, which is every first Friday of the month, you can expect a movement or a reaction from Bitcoin. And then if there's any news like CPI, or there's a high impact news that came out, maybe something happened and then there's an official announcement, those kind of fundamentals are likely to move BTC too. So for correlation, when analyzing BTC in technical analysis to use and understand the chart, then you look at DXY. Okay, DXY gives a good confluence to understanding the correlation between BTCs and USDT. So the high impact news on USD are likely to affect Bitcoin. Okay. So I had to unmute you because of this, but you can unmute your microphone now if that's clear.
Okay. Okay. So, like, to get it clear, the main reason is because BTC is paired with USD. So, anytime there is news concerning USD, that it is going to affect BTC in
Yes,
general, if I'm to understand.
yes, because the USDT is a token that doesn't move on its own. It's like the junior brother. Let's say it's a different face of USD. It's literally the same thing. So if you're Nigerian, the present price of USDT is likely the same price of USD. So you will know that there's no difference, and if there's any move that's going to impact USD, it's likely going to impact USDT. So if there's a negative news on USD that drops USDT down, and BTC is the code of USDT, it's definitely going to affect BTC
That's
USD.
affect. Okay. Wow. Wow. Thank you so much. Because I've been like trying to understand why anytime there is always any all these high impact news, it always has an effect on BTC. So I was always curious. Nobody
Yes,
has been able to
it's
give
the
me
pair.
a reasonable explanation.
Yeah, it's the pair correlation with USDT. Every cryptocurrency that is paired to USDT, if there's a news that moves USDT, even if it's bullish or bearish, it's going to affect crypto as well. It's not affecting Bitcoin individually because it's Bitcoin. No, it's affecting it because they are all paired with USDT, and USDT is the token, the crypto token of USD. Okay, so
Okay.
there's this conspiracy that people think that yeah the United States doesn't accept crypto, but USDT is the official cryptocurrency of
Yes.
USD. Yes, and it has been available right from the beginning of cryptocurrency. So they are paired. They are kind of like the most active country in the crypto space that has a very active token. Okay, so their token is any news that's related to US is going to always affect the crypto space too. if it's a high impact news. Oh.
Okay. Okay, but one more thing. USDC, is it also the same thing with USD or USDT?
Yes, the US, in US they have the USD, which is the dollar, and then they have there's this token after below dollar, if cents, sorry, there's the cents, right? So that one is like a coin.
Yes.
So when you have the $1.50, so that's how the USDC is on the crypto space. So the USDC is the coin of the USDT. So the same way they have the dollar, they also created one for their coin space.
Okay.
Yeah. So
Okay. I
they are
think
also
this
discussing.
answer. Yeah, I think this answers my question. Thank you.
Okay. All right. So
Yeah.
any other more question? If you have another question, raise up your hand. So I'll unmute you. You ask a question, and then we will move on to the next person. Okay. So any question? And for those of you who are not aware of what we are doing in the J4S house space, we are trying to create an ecosystem where traders can also build their own platforms. All right, so we have multiple educators and influencers that are working with us. If you are looking forward to owning a blogging space, it's all yours. You don't pay us for anything. You can use our contents. If you like the educative videos and you would like to post them to get views on your social media platform, we can teach you how to do that. So you too can also get monetized, and then you can start getting paid through social media. So we have tested it with few individuals that participated earlier when we announced it, and some of them are getting paid already. So if you want to be a content creator and you want to be an educated content creator, we are trying to change, the dynamics of the trading space so people don't make any contents that are not valuable and then lead to misinformation. So if you're looking forward to having yourself as a content creator, or you're looking to grow your own space, you can join the administrative team, and then we will teach you how to, start your own platforms. And then you can also be rest assured that you have a community that would also promote your platform, so you can also start getting engagement. So we are trying to create a space where we would all promote each other, and then we would all grow our platforms till we all get monetized. Trading is the only industry where you don't have to record your voice, like the singing industry or the video industry. You can all do that using your chat. So your chat is literally a commodity if you know how to market it yourself. So you are all going to be assured that you have someone who is aware of the space of the forex and the crypto that can educate you on how to do it, to you're a professional to do it yourself. So I'm just trying to make sure that we create as much impact as possible to individuals that are within this space. So if you'd like to join that and you would like to know more, you contact me. And if you're already engaged with us, or maybe you have been tied up with so many activities, just so that you can always come back at any time. My DM is free, and I would attend to all of you individually. So any more questions? Anybody has any question related to trading that you would like to ask, and then we'll move forward. I'm thinking maybe the next section we could invite a guest, maybe someone the community can also ask questions on the trading space as well, and then someone we can all learn from. So I don't know if Tony has another question. I see him raising up his hands. So I don't know if I should unmute him. Tony, do you happen to have another question?
My question is still related to the question I asked earlier. I don't know if, concerning this news of it, there is also something I do still all these actual greater stuff. I was hoping you also make mention of that part, but you left it out.
Oh, sorry, could you rephrase it? What do you mean?
Like in let's say an high impact news, or let me say there's an high impact news now. There's something they do say something like something is actual or greater than something. Those I don't really understand how the news. Well, like the question I asked before, I asked why does the fundamental have effect on BTC, and then you said it's because it was paired with USD. And so I'm now asking, like after the news, each time they drop the news, there's something they do say. This is greater than something or lesser than something. I don't know. There's how they normally say it. So I was like hoping maybe you could like give more light on that.
Okay, so um, that on that aspect, I would call it sentimental. Now, the way you see me doing the poll once in a while, I create this poll that traders can vote. So that stuff is basically how most of these websites do their own analysis as well. They go to foreign platforms and then they take polls from them and then they ask people who are trading from institutions to see their intake on that particular pair. So how you use that is simply on the sentimental aspect. You don't know if those are artificial intelligence or if they are robots that are just doing partial sentimentals. I never really liked them. That was why I started doing the polls on the group so that people can see from live voting what people think on each pair. Okay, so how you use them is that if the greed price, let's say people are being more greedy, it means that people are holding. If they say we are greedy to sell EUUSD, is because probably we are already in most buying positions and the market is against us. So you know when your greed is high and you're like, let me just wait, it's going to go in my direction. So that's what they mean by the greed. A lot of people are feeling that same way and they are all holding their buys, not because they are having any positive reason for it. They are just being greedy. So it's a sentimental aspect. That's not the major fundamental, because fundamental is talking about how you use news and how you make use of informations that are being released. But the greed and fear is all about, we are not really sure gold is going to be going up, but we are scared that we might miss out if we don't buy. But we are just not setting on our direction. So those are sentimental updates. There are three aspects of analysis. You can do technical analysis, which is the one we do in the channel, the chart, or you can do fundamental analysis, which is taking information from the country, the company, the crypto, or from the website to make your decisions on why you want to buy or sell. Or you can do sentimental analysis, which is looking at people's reaction. If they are willing to buy this particular pair, maybe the buying pressure is higher than the selling pressure. You can say, okay, I think everybody is being sentimental right now, and that's not really going to work. So I'm going to go and sell instead. So those are called sentimental analysis. You're not buying based on any technical reason or any fundamental reason. You're just being sentimental because everybody is buying. So if everybody is buying, I'm going to sell instead because the majority are going to lose and the minority are going to win. That's how trading works. So this is called sentimental analysis. Or you can decide to say, I'm going with the buying because everybody is buying, so I don't want to miss out. I'm going with the crowd. So this is being sentimental. It's completely sentimental. You don't have any reason for it. So people do those analyses too. But how I use it in my own end is probably when I have a market where I'm not really sure. On the technical aspect, it's showing that the market is bullish. And then at the same time, I'm seeing some reasons to fundamentals why I want to sell. So I could decide to do a sentimental pool and see everybody's opinion on it, which is the majority looking to sell or buy. If the majority are looking to sell as well, then I might say, okay, if I'm still going to buy, I'm going to go on a low risk, just so I'm safe. I'm not going to change my bias because everybody is doing the other way around. No, I'm just going to go on low risk, which is managing your lot size for your position. So this is different ways you can use sentimental analysis. But those things you see about the fear and greed, those are sentimental.
Sorry, I think the question is trying to ask is how to interpret the financial data like FMCO,
Yes, yes, like yeah, more like
the
actual data
actual
than
forecast
forecast.
and the previous one.
Oh.
Yes,
Well,
yes, that is
you can use this app they call Forex Factory. Now, if a news is released, first of all, let me give you this update on how I use it first. Then I would give you some websites recommending to how you can use it. So how I use
okay.
fundamental update is that I wait for the impact, not the news release. Because the news release is just an information. It's not going to change anything. But the impact of the news is going to tell you what is happening on the chart, which is still technical actually. So when a news is being released at 1 p.m., the impact of that news, the market will start reacting immediately is 1 p.m. For the first around 12 o'clock, before it's 1 o'clock, the hour before 1 o'clock, the market is going to be slow. You're going to see a choppy market. The price action won't be clear. Then once it's 1 o'clock, you will see volatility will kick in, where you might see a big flow to the upside. Okay. So that kind of impact now, and then you can go and use most of these websites that give the forecast to see if the news was positive on DXY. If the news was positive on DXY, you're not expecting DXY to just drop immediately. No, there's going to be first a manipulation. So you might see an increase, an instant increase in price action that will be kicking out liquidity. And then in the next 15 minutes, which is the first 15-minute candle, you're going to now see a new direction. So the first 15 minutes might be bullish, then the next 15 minutes will be bearish. This is now the first 30-minute candle. That is 15 plus 15 is 30. So the first 30-minute candle is out. Now, the second 30-minute candle would move in the actual direction of the news. So what I do is that when I want to trade a high impact news period, if my entry is already in before the news, I will break even and then I will watch the reaction. So the first 30 minutes is for your own personal observation to see the direction of the impact. So if it's a bearish news on DXY, you know that Euro USD is going to be bullish because USD is behind Euro. So USD is the base and Euro is the code. So if it's bullish on DXY, Euro USD will go down. If it's bearish on DXY, Euro USD will go up. But before it goes up, you always see that spike below a news candle. That is the manipulation that went in the opposite direction. So that manipulation is always happening within the first 30 minutes. So once you identify that first
Okay.
30 minutes and you see that manipulation, then you can say, okay, the market is now setting to want to move in an actual direction. Sometimes it doesn't happen that way, and then the news just drop all the way around. That is based on the impact of the news. So sometimes you see this FOMC, they might say the interest. Let me use the interest cut rate. So bank interest cut rates might be lower than expected. Okay, it might be very, very low than how they expected, which is a negative impact for traders. Now you can see that first of all, the market might just go bullish, and then all of a sudden it just goes bearish. So most of those people that rush to buy because the news said it's bullish, they buy, then they get stopped out along the way. So fundamental is a kind of like a complex tool to use when you're trading. Let me mute this one, please. Okay. So fundamental is kind of like a very, very complex tool to trade. But when you're mixing it with technicals, you can have that insight that you're looking for. So I don't just jump into a trade because NFP is bearish. So I'm just going to go and sell. No, I'm going to wait for the first 30 minutes so the manipulation can happen. Quick buyers and quick sellers are going to get stopped out within that first 30 minutes. Institutions are going to lose a lot of money within that 30 minutes. And then if the first 1 hour is going to give an impact, the movement of that 1 hour has to happen within the dying minutes. So nobody gets to join in. So the second 30 minutes is where the real trend will kick in. So you have to now go along with it with time frames. 2 15-minute candles would be for manipulation. You can go and cross-check this on your MT4. Go and look for maybe the NFP of this week. Check the 2 first 15-minute candle. It's going to be manipulation. Then the third 15 minutes candle, because in each 1 hour we have 4 15 minutes. In 30 minutes we have 2 15 minutes. So these are based on candlestick. In 1 hour we have one 1 hour candle, right? Within that 1 hour candle we have two 30 minutes candle. Within the 30 minutes candle we have each 30 minutes having two 15-minute candle. So you are rest assured that the first 15 minutes is going to be manipulation. The second 15 minutes is going to sink in the manipulation. Then the next 15 minutes is going to do the intentions of the technical chart, which is the trend. So manipulation cannot be done too long because it takes a lot of money to manipulate the market. So even if they're going to move in the wrong direction, it's going to be fast, which is probably within the first two 15 minutes candle. So you can go to Forex Factory, and that's like the only, I've been using that since the day I started trading. That was the one that was recommended to me, and till now it's still very useful. So Forex Factory is one of the tools that help get accurate news when you want to use for your trading. I know there are so many others too you can use, but this is the one I use. That's one I'm recommending for you. So I hope that answers the question.
Yeah, thank you.
So any other person, let's say we would be here for another 20 minutes. Anyone has any question that you would like to ask so we can share insights on that before we move on to the next person? If you have any question, just raise up your hand by tapping your screen, and then I would unmute you. You ask a question, then we'll share insight on that. For those of you who are swing traders, you don't have to make analysis of the weekly time frame every single day. This was one of the questions somebody asked me on my DM, that do I clean my chart each time I come to trade? No. The weekly charts basically release candlesticks once every week. So each day is going to be the same. Each of the days within the week is going to be the same weekly candle till the week is done. So you can do weekly analysis every weekend, which is to see the impact of the new weekly candle. Where did it go to? What did it do? So once you get your insight of the weekly on the weekend, you can then look at the impact of each daily candle at the end of the day. Then the 4 hour, you can now use the 4 hour to tell the structures of what the candlesticks are doing. I think there are 8 4-hour candles in a day, if I'm not mistaken. So those informations can help you to understand the structure or the impact of what the swing direction could be. So for intraday trading, you can do 1 hour analysis every day. So each day you come, you just go to the 1 hour charts to make a new analysis of the 1 hour structure. But you don't have to change your bias every single day for the weekly. The weekly bias can be changed every weekend, and then the monthly bias can be changed every month end. I just wanted to clear that out so that everybody can get that insight. That's how I do mine. I do monthly analysis every month ending, and then I do weekly analysis every week ending, daily analysis every day, and then if I want to trade, I go to the 1 hour daily. So we have Theo raising up his hand. I'm going to unmute you now so you can ask your question. You can speak now. I don't know if you heard us. So you're okay.
Okay, good afternoon.
Good afternoon. Good afternoon.
My question goes to I want to ask that concerning liquidity sweep. Like, we understand that at every high and every low, liquidity is seated there, and most of which traders will wait for markets to sweep, maybe there are inducements, or wait for liquidity sweep, then the market goes in the opposite direction. My question is, like, is it a lot of money at that high? Because if you observe that sweep, it might just be maybe a small wick, like about 3 to 5 pips. So what is that important about that high? Like, are people, like, are they stupid to put like their stop loss, their money at that every high? So that's my question.
Okay. Now let me explain. When
Okay.
you see um, swing highs and swing lows, why they are liquidity, you know, in every method of trading, there's one thing that would always be there for the method to be logical. That is market structure. Because everything moves in market structure. It's a principle that governs the world that everything operates under. So even if you're going to let me give a live example scenario before I go back to the chart. For example, if you're going to invest uh, in a company, or let's say you're given a job in a company, they pay you every month ending, right?
Yep.
So every month ending would be the high or the low of that month, because that
Okay.
is where the new cycle would start from. So if it's on a chart, every month you would see a dot, which is where you get paid. And then let's say you're being paid based on the effort you put in every month. So if your effort is going to be summed to a certain amount, that will be done every month ending, right? So that would
Yep.
then create a high and a low, and then everybody would be expecting um, an impact on that high or low ending. Do you understand? So
Yep.
when you are seeing things like that, you should understand that the highs and the lows are liquidity not just because of individual perspective. It's because they are built based on market structure. So if a high has been induced multiple times, let's say for a very long time, you see that they have created liquidity below that particular high for a long time. On support
Yep.
and resistance, that high will be the
Yep.
official high of that range. So support and resistance trader would say if that high gets broken, then there's a breakout.
Yep.
Swing SMC traders would say if that high gets broken, then there's a new range to observe. Wyckoff traders would say if that high gets broken, then it's a sign of trend. Elliott wave traders would say if that high gets broken, then it's a new wave. So you see, it's a method. The market structure is a method that has been built into almost every strategy. That everybody's perspective would be based off on that high. So swing highs and swing lows are liquidity, not just because people are just placing stop loss above or below them, but because they are the fundamental blocks of market structure. Once a high is broken with a body close, not just a wick, that is a new range. But if a high is broken with a wick, then you know that their intentions was because maybe that high has generated a lot of liquidity. A lot of people have been seeing that high as um, liquidity. So they wanted to intentionally clear out the liquidity above or below the high. So liquidity are always above or below swing highs because of market structure, not because of anyone.
Okay.
Yeah.
All right.
So you
Thank you very
understand
much.
now, right?
Yeah, I do. Thank you.
Okay. So any other question? That was a nice question actually. That was a nice question. So anyone has any other question, you can raise up your hand and then we can clear that out. Now, on the aspect of swing highs and swing lows, you need to understand that highs and lows are created on every time frames. So when you're looking at swing high or a swing low on a weekly time frame, that is the weekly high and the weekly low. If you go to the daily time frame, you want to look out for the daily swing high and the daily swing low. You don't have to necessarily highlight them, but you can look them as the internal obstacles to the swing direction of the weekly. So just like as I said, you can do your weekly analysis every weekend. So on the weekly analysis, you can just easily identify the weekly high and the weekly low, which is holding the current range. And then you go to the daily structure to identify the daily high and daily low, which is currently within the daily range. And then on the 4-hour time frame, you can now look at what structure is doing within the daily high or the daily low. So these are ways you can get yourself a clean understanding of how swing points form, and then you can now start reducing your scenario and reducing your perspective till you get your exact entry from this point. But if you're looking at premium and discount, it's better you look at the premium and discount of the weekly and the premium and discount of the daily. So you can now use those premium and discount areas to know where to look for buying opportunities and selling opportunities. Because the 50% of the weekly premium and discount level could be let's say a discount level of the weekly time frame. On the daily time frame, the 50% could still be within premium. And for that reason, now maybe that particular area of interest within that 50% might not hold. You see, so when it comes to understanding swing areas, you should understand that they're also making impact to how you analyze and how you see premium and discount. So the premium and discount of the weekly is likely to shift a little bit when you identify the swing high and swing low of the daily. Then the forward time frame can now tell you the structures of which areas to look for obstacles and points of interest. So anyone has any other question? We are in for another 20 minutes, I guess, and then we'll move on. You have any question related to technical analysis or crypto or Forex or fundamentals or psychology in trading or how to deal with your lot size or risk management? You can ask them now, and then we would look into sharing light on that. So if you have any more questions, you can raise up your hand. I see market deal. I'm about to unmute you now, so you can speak. All right, your microphone is free now, bro. You can unmute your microphone.
Yeah, good afternoon, boss.
Good afternoon, bro. Good afternoon.
Yeah, my question is, how can I achieve consistency on my, let me say, anytime I bought a profit account, I will be able to pass the first phase, second phase, entry into life account. But the moment I enter into the life account, that will be the end. I'll just enter into my losing streak. Everything will slow down. I was like,
Okay.
I'm going crazy now. About 2 accounts now currently. So this week, I was just drained off. Like, I don't know what to do. Anytime I'm into funded, I'll, I'll just enter into my losing streak and everything will go down. Like, what do I need to do? Am I the one? Uh,
No,
am
no,
I,
definitely not you, because I'm pretty sure almost everybody faced those things in their early stages or are still
yeah,
facing it,
or if my
or
technical
one way or the other,
analysis.
how to look for it. Yeah, so I will share my own cheats for you because it's a problem that I won't say it's a technical problem. It's a psychological problem actually, because when you have seen the chart multiple times, you should expect it to give you some psychological impact as well, especially when you have heard multiple people say going live is harder than playing on demo accounts, or passing a phase is easier than trading live. So those kind of statements also affect you psychologically. Now, how I deal with this, first I want to share this with you that it took me 8 pro firms before I got my first pay in trading pro firms. So if this is your second time, don't, because of that, think you are the cause of it. Everybody had to face it at some point, because you have to get smarter from your own experience to be able to know how to deal with these things, or you learn from somebody else's experience. So how I got to handle mine, currently I'm trading a profit, and this is like the first profit I've stayed stable on for the past 6 months without blowing it. Mostly the highest I stayed before this was 4 months before I had to get a new one. So a profit account is not there to stay with you forever. I don't think anybody can manage a profit forever. One, that's why I don't trade for anybody. Secondly, you are supposed to make what you invested first before you look out to make profit. So when I go live, instead of thinking of how much you will make from this particular profit to change your life, instead pay attention to how fast you can easily make the money you use to get the profit before you start making profit. Because in every business, your capital comes first. So when you get your capital, then you can start looking out for profit. So you have to treat it like a business, not as a profit. So when you go live, instead of now trying to be rational and trying to make profit quickly, instead draw out a plan. Know that you have a business you're managing. And your aim for this business first is to get your investment back, which is probably the $80 or the $100 and something you used to get the profit. And then you don't have to trade every time. You're your own boss. So nobody is telling you to go into the market anytime. This week in particular was one of the most terrible weeks to trade for this month. It's not basically because of fundamentals or anything. It's going to keep getting harder from here because of the US election coming up in 2 months. So we're not expecting the market to give us any clean price action from here. It's going to get difficult. If not just because of the election, we are heading towards the ending of the year. Normally during this period, the market is crazy. Secondly, we then have an election coming up. Thirdly, almost every country is at a recession point of their economy. So price action is going to be as chubby as it can get. So if there's any time for you to be more careful, I'm not saying stay away from the market. We have to trade, but you should be more careful on how you manage your risk and how you choose your areas of interest. So if you want to pass this particular phase you're in right now, my advice for you is to become more conscious of how you navigate through your account. Don't set your mindset at, because you're already very good. For you to be passing phase 1 and phase 2, you're already good. That's good enough for you to make money. Secondly, your psychology is nice. That's why you can pass phase 1 and phase 2. Unless your psychology will get messed up at phase 2. So what you need is to have a plan for life. A plan for life is different from a plan from phases, because phases you have a certain target to make. So you're working for the profit. They gave you a target to make before they can give you a live account. On a live account, you're your own boss, and your decisions are what would take you to the next stage. So your first live challenge would be to make your capital first before you look into making profits. Once you pass that challenge and you have your capital back, you can say, okay, your next challenge is how can you top this up before your withdrawal date. This is how I trade my own. This is how I get my payment. So your aim is to get your payment back, because you can make your profit and then before the fixed week for your payments, you lose your profit and then you're in minus again. So you don't have to trade too rapidly on the first stage of getting a live account. You can instead get your live account, focus on getting your first payment, because there's a certain feeling psychologically you will get once you get paid that would also encourage you to keep going. So I look out for my first payment as my third phase, instead of looking at it like I'm already a live trader. So when you are live, you are still in your phase 3. Your phase 3 is get your capital and your first payment. So if your capital invested in that account was $80 and you make $80 in the first 2 weeks and you still have like 1 more week before you get your payments, you can use that 1 more week to make your profit of maybe $50 to make your money $150 or $120. Then you get your first payment first. Your psychology will not be fixed that this account is no longer risking anything because you have your capital back and you got paid for doing it. So you never wasted any time. Now you are a live trader. This is now when you can say you are a live trader. You can now say, okay, how much profit do I want to make by month ending or by my next payout? So how much profit am I looking to make before my next payout? If the phase 1 was to make $800, which is 8% of 10K account, you can now say, okay, $500, which is 5% of your 10K account, will be your phase 4 payment. So for that month, you will focus on making $500, not just trading to make money. And then when you make your $500 before that due time, which is literally the same thing as Profim giving you pass on your challenge account days to pass your account. So you can use this as the official day of payments, as the official time to pass the challenge of making your $500. So when you start doing this, you see that it's already 4 months gone, because you got the account and it took you a month before you went live. It took you another month before you get your first capital. It took you another month before you got your second payments. So you are now trading live for the past 3 months. And that was how I got to pass my 9th account. And then I overcome that challenge. And now this is the first time in the past 4 years I have still done this process for 6 months. So I've been in it for the past 6 months. Okay, so this is how I easily, pass through my account challenge. I hope that's clear. Hello, Theo. Are you clear? Oh, was it market deal that asked that question?
It's not me. It should be market day.
Okay. Yeah, he's on mute now. Are you market
Thank you very much.
deal?
Thank you.
Are you clear on that?
Yeah,
All right.
sure. Thank you,
So
sir.
we have one more person. I will take this question and probably then I will go work on the recordings. Mangungun Dengun Nation. That's a very nice name. You are free to mute your microphone now, so you can ask a question. Hello, bro. You can unmute your microphone, so we could ask a question.
Hi, bro.
Hello,
Okay,
brother. How you doing?
I'm good. I have a question. Uh, when higher time frame is highly bullish and the lower time frame is bearish, it changes to bearish side. So, which one do we choose? That's my
Okay,
question.
so let me get you clear. You said when the higher time frame is bullish and the lower
Yeah,
time frame
it's
is bearish, which one do we
yeah.
take?
The lower time frame turns bearish. So, and the existing higher time frame is bullish. So, which one do we choose?
Yeah. Okay, so when you're trading in the market, you need to understand that if there's going to be a change in the directions, it will definitely start from the lower time frame. So if the higher time frame is bullish and then the market is going to be changing direction, the first place you would see the reaction from is the lower time frames. So it's very important as well to also note when the lower time frame is changing directions, one. Then secondly, the higher time frame can be bullish and then the lower time frame can also be bearish as a retracement, which means you can still follow the lower time frame bearish scenario, but you should have in mind that there's every chances that this scenario you are seeing right now is a counter trade and is kind of just a retracement. The market can still be bullish. So how do you differentiate them and how do you solve this problem? If your higher time frame bullish scenario is hitting a higher time frame bearish area of interest, the first point to make these changes would be the lower time frame. So if you're coming from a higher time frame bullish trend, which is in a bearish area of interest, and you're now seeing a bearish structure on the lower time frame, while the higher time frame is still looking bullish, you can still then go in to get an entry, understanding that this could be a change in trend because the trend will change from the lower time frame first. Okay, so your first area of interest for TP should be the first obstacle from the higher time frame. Let me see if there's a way I can draw. No, I don't think that's possible. But so when you see the lower time frame chart, when you see that bearish scenario, you should go and look for the closest bullish area of interest around. So that bullish area of interest around would be your obstacle. Nobody's saying you should buy from there first. Obviously, the market is still within that bearish scenario. But you can sell to that bullish point, knowing that if the market is still bullish, that bullish point would go bullish to kick you out. So that becomes an obstacle that you would watch, either to get a bullish continuation entry or to get a bullish continuation entry to close your bearish trade, knowing that that bearish trade was a counter trade, or to observe it. If that bullish scenario gets broken, then that's a confirmation that the trend has changed character. Coming from Wyckoff, Wyckoff scenario gives us this understanding that the reaccumulation happens on the continuation trend. So if the lower time frame is bearish and the higher time frame is bullish, means the trend is still bullish. And then if the lower time frame is bearish, and then you understand Wyckoff, which the mentorship is on YouTube, you can then now notice that this is a reaccumulation, and there's every chance that this is still a bullish trend. And even if you're going to be selling, it should be a counter trade. That's where Wyckoff can help you with that problem. Because if it's then an accumulation, then you will understand that this is a reversal point, and the higher time frame trend is likely to change from this point. While if you use support and resistance, which it comes in with storyline, if the weekly storyline is bullish and the 4-hour storyline is bearish, you can now say, okay, the closest support level, which is to support the bullish trend, if price trades from the bearish resistance to the bullish support level, if it doesn't break and you get a bullish reaction from there, means that was just a lower time frame bearish storyline playing out, and the higher time frame bullish storyline is still in progress. But if the weekly storyline coming from a weekly POI is still bullish and has not yet hit a weekly bearish storyline, which is like the weekly has not gotten to a bearish POI to drop from, then you understand that that bearish scenario on the lower time frame is only a retracement. It's not going to make any impact. So all this understanding comes in with how well you understand your technical method, whichever method you are familiar with. But there are multiple ways you can deal with this, and there are multiple ways this can be defined. So if it's a reversal, Wyckoff can help you with the accumulation schematic if you can identify it. Or if it's a reaccumulation, then you know it's a retracement. Why smart money concept, the concept of higher time frame point of interest, if it's not in a higher time frame bearish point of interest, then that bearish scenario you're saying is a counter trade. Is not really a change in trend. It's just a counter that you can just join for ping pong. Just enter for a little while, and then you look for the closest bullish area of interest. So I don't know if that's clear to you, if that answers your question.
Yeah, I think I understand now. Thank you.
Yes. On
Because
the next,
I have my setup, but I was confused now.
okay. On the next Wyckoff video, which is on reaccumulation, how to identify reaccumulation, I'll be releasing that one tomorrow. So you can watch that one and understand a little more on how to observe a retracement from a reversal. So when you understand the two of them, then when you see a lower time frame bearish scenario, you can easily then say this is just a retracement. The market is still bullish, or this is a reversal pattern. I should be very cautious and I should go on low risk. So it's normal to get confused on those scenarios when you don't understand them. But if you watch the tomorrow video, you should also get a higher perspective on how to handle that.
Okay, I understand. Thank you, bro.
Yes. So any more questions? We're about to end the section now. We'll be here for the past 1 hour. I'll try to get the recording and send it to you guys with probably some informations diagrams like to this question we just recently asked. I will try to get some diagrams that we could put along with the video on YouTube. So when you're watching the recording, you can easily then understand it from these diagrams too. So any other question, or is this the end of the section? Anyone has any question you would like to ask related to trading? Okay, so I don't see any more hands. So I think this will be the end of the section. Thank you all for joining us today. I hope you have learned something from this. If this section was beneficial to you, please leave a reaction in the main channel so you can support. Your reactions are very, very helpful to us because they also help Telegram recommend our channel to other traders. So if you find this channel helpful, most of the time you can just easily just react to our charts or react to conversations like this with the reaction emoji. So Telegram can then now, the algorithm can then pick that the channel is very active and then recommend our channel to other traders as well. So thank you all for joining us today. Thank you all for this opportunity. I'll see you on the next live section. Bye-bye.